Hey guys, and welcome back to Ask Traders. Following on from last week's video where we spoke about stop losses and what they are, we're going to take a deeper look into stop losses and specifically trailing stop losses this time. First of all, let's start off with a definition then. A trailing stop loss is a special type of order where the stop loss is not set at a fixed price level or price. It is a certain amount above or below your entry. And as the name says, it trails it by that amount. So if we go ahead and take a look at an example, I've got the Euro USD chart up here, hourly chart, and let's say we wanted to enter at the level that this blue line is at on the close of this candle on March 26th at 8 AM. So we enter at 109.37. We set our trailing stop at 108.90, the red line here, as you can see. Price moves in our favor. Now, when price gets up to here, let's say the close of this candle on the 26th at 7 PM, our trailing stop will do as the name says, it will trail it. So originally it was 47 pips below, so the close of this candle is at 110.53. So if my maths is correct, it will now be at 110.07. Our stop will move with it and it will now be at 110.07 here, protecting our risk and essentially keeping us in profit when price does eventually go against us, which you can see up here. One of the things we're frequently asked here at Ask Traders is how and where you can place a trailing stop loss, and in my opinion it really depends on the market you're trading in. If you're in a highly volatile market, you're going to want to place a wider trailing stop so that you can counteract those wide swings in the market. If you're in a less volatile market, you can afford to tighten that stop loss a little bit. Placing stop losses and knowing where to place them so you're not taking out on the market too quickly or you're not leaving money on the table, it can really be the difference between a consistently profitable trader or a consistent losing trader. So let's take a look at a trailing stop loss strategy then. One of the most frequently used trailing stop loss strategies is using it in conjunction with a ATR, or an average true range. An average true range shows how much the market moves or could move on a daily basis. So I've got an ATR indicator here for you. As you can see, it shows the range for the high and low of the day. So if we were to take this day, the 26th of March, the low of the day range would be 108.84 and the high of the day range would be 110.44. Using the ATR trailing stop strategy will mean that you're basing your stop loss on how active the market is. If, for example, our ATR is 50 pips, then it means that the pair is moving on average 50 pips daily. If we, over the last 20 days, so we've got a daily ATR of 20, which means it tracks the last 20 days here. If we placed our stop 75 pips away from our entry point, or 1.5 ATR away, then we're protecting ourselves from an average daily movement against our position. So essentially the way the strategy works is if we were to enter at the same point as before, so on the close of this candle here at 109.37, we would then put our stop loss below the daily range at 108.76 at the red line here. That way what we're doing is we're protecting ourselves and placing our stop in a logical manner, which is below an area where there is risk and an area where we could be stopped out, because as you can see it's turned around here and here and here. But I've got to stress, knowing where to place your trailing stop will ultimately come down to you and tracking and backtesting your own trading strategy. The more data you collect, the better you'll be able to understand where the best trailing stop loss placement is for you. It's all about sharpening your edge in the markets. If you're constantly tracking your data, you'll understand and know how the market moves, where best to place your stop and your take profits are, and it will help you to become a better trader. If you have any questions for us or you want to see more of our content, then simply drop us a comment below and don't forget to hit the subscribe button. Alternatively, you can head over to our website, asktraders.com, and speak to some of our more experienced traders in our forum. Other than that, I wish you a great trading week and I'll hopefully speak to you soon.